Big Beautiful Bill Explained $6,000 tax cut versus real cash for seniors. Today we're diving into a question that so many of you have been sending my way. You're seeing headlines everywhere about a big beautiful bill and a new $6,000 benefit for seniors. The real question is, will this put an extra $6,000 in your bank account? Is this truly extra income for seniors? Or is there a hidden catch behind all the headlines? So many of you have been writing in with the same concern, and I believe it's important to say this clearly. Seniors deserve clarity. My goal today is to help you get the facts straight. We're going to look at what this bill actually is, explain what a tax deduction really means for your wallet, and compare it to a real cash stimulus check. The answer is a bit more complicated than a simple yes or no, but we'll go through it piece by piece so you know exactly what to expect. Before we get into the details, please remember to hit that like button and subscribe to The Wealthy Elder if you want to keep seeing honest, senior-focused updates without the fluff. We'd love to have you as part of our community. Section 1. The Big Beautiful Bill. What's inside? So let's talk about this One Big Beautiful Bill, or OBBAA, as it's officially known. This is a major piece of legislation that does a lot of things, but the part everyone is talking about is a new $6,000 senior bonus. Now, here's the most important thing to understand, and I'm going to say it a few times because it's the source of all the confusion. I believe it's important to say this clearly because you need truthful answers. This is a tax deduction, not a direct cash payment. It is not a stimulus check. It is not a grant. It's a number you use when you file your taxes to hopefully lower the amount of your income that the IRS can tax. So, who qualifies for this? The rules are very specific. First, you must be age 65 or older for the tax year. For 2025, that means you have to turn 65 by the end of that year. If you're 64, even if you're on Social Security, you won't be eligible for this specific new deduction. Second, there are income limits. To get the full $6,000 deduction, your modified adjusted gross income, or MAGI, has to be $75,000 or less if you're single. For a married couple filing jointly, that limit is $150,000. And if both spouses are over 65, you can each claim it for a total deduction of up to $12,000. But what if you earn more? The deduction doesn't just stop, it phases out. The more you earn over those limits, the less you can deduct. For a single person, the deduction starts shrinking after $75,000 and is gone completely if you earn more than $175,000. For a married couple, that phase out is between $150,000 and $250,000. This really targets middle-income seniors, those who have enough income to owe taxes in the first place. Another crucial detail is that this is temporary. This deduction is only set for the tax years 2025 through 2028. After that, it expires unless Congress passes a new law to extend it. You might have heard supporters say this fulfills a promise to eliminate taxes on Social Security. That's important to understand because it explains why you might hear one thing but then see another. This bill does not eliminate the tax on Social Security. It simply reduces your total taxable income, which might indirectly lower the tax you pay on your benefits. But it's not the same thing. Section 2. The nuts and bolts, how a tax deduction actually works. So, we've established it's a deduction, but what does that really mean for your money? This is where the reality of the bill comes into focus. Think of it this way. The IRS doesn't tax your total income. It taxes your taxable income. A deduction is just an amount you get to subtract from your total income to make that taxable number smaller. And it's very different from a tax credit. This is an area that causes a lot of confusion, so let's break it down. A deduction lowers your taxable income. A tax credit lowers your actual tax bill dollar for dollar. A $1,000 credit saves you $1,000. A $1,000 deduction only saves you a percentage of that based on your tax bracket. This bill offers a deduction, which is almost always less valuable. Let's walk through an example. Imagine a single senior, Mary, who is 68. Her total income is $60,000 a year. For the 2025 tax year, the standard deduction for a single person is about $15,750. Since she's over 65, she already gets an additional standard deduction of $2,000. Her total standard deductions are $17,750. Now we add the new $6,000 bonus from the Big Beautiful Bill. Her total deductions are now $17,750 plus the new $6,000, which equals $23,750. We subtract that from her $60,000 income. Her taxable income is now $36,250. So how much did she actually save? If Mary is in the 12% federal tax bracket, her savings are 12% of the $6,000 deduction. That comes out to $720 for the year. It's real savings, but it's a long way from a $6,000 check. Let's take a married couple, John and Susan, both 70, with a combined income of $120,000. They qualify for the full amount. Standard deduction, married, $31,500. Existing over 65 deduction, $1,600 each, which is $3,200. New senior bonus deduction, $6,000 each, $12,000. Their total deductions are $46,700. Their taxable income drops by $12,000. If they are in the 22% tax bracket, their tax savings from this new bill would be $2,640. Again, a very helpful amount of money, but it's not $12,000 cash. This math is the core of this bill. Section 3, the main event, the tax cut versus real cash. So now we come to the main event. The real question so many of you are asking, what is the practical difference between this $6,000 senior tax deduction and a $6,000 stimulus check of real cash? On one side, you have the $6,000 senior tax deduction. The benefit is a reduction in your taxable income. It's a number used in a tax calculation. The timing is delayed. You won't see this benefit until you file your 2025 taxes in the spring of 2026. It does nothing to help with bills you have right now. The value is indirect and depends completely on your tax bracket. For some, it might be worth $720. For others, $1,320. And for many seniors, it could be worth nothing at all. This brings us to the biggest issue with using a deduction. It provides zero help for the millions of seniors who have little or no federal income tax liability to begin with. If your income is already low enough that you owe zero in taxes after the regular deductions, this extra deduction is useless. You can't lower a tax bill that's already zero. It's like having a coupon for a store you don't shop at. This is the reality for many low-income seniors whose main income is from Social Security. And it completely leaves out any senior who doesn't file a tax return, often because their income is too low to be required to. If you don't file, you can't claim a deduction. You get zero. Now, let's look at a hypothetical $6,000 stimulus check. The nature of the benefit is real, spendable cash, a deposit in your bank account or a check in your mailbox. The timing is immediate. Past stimulus programs sent money out within weeks, providing immediate help for today's expenses. The value is direct and universal. A $6,000 check is worth exactly $6,000 whether you owe taxes or not. It has the same buying power for everyone and provides the most help to those with the fewest resources. To put it simply, the tax deduction is a delayed coupon that might save you some money on next year's taxes, but only if you owe taxes. A stimulus check is cash in your hand today. There are two very different approaches, and this bill chose the tax deduction. Section 4. The bottom line. Who wins and who loses? So, after all of this, who really wins with this new law? And who gets left behind? The clearest winners are middle and upper middle income seniors. These are retirees with enough income from pensions, 401k withdrawals, or work that they consistently owe federal income tax. For a retired couple with an income of $110,000, for example, a $12,000 reduction in their taxable income will lead to real, significant savings on their tax bill. This policy is designed for seniors who are financially stable enough to have a tax liability but aren't so wealthy that the benefit phases out. Now, let's talk about who sees very little or no benefit. The largest group is low-income seniors. This includes millions of people whose only income is Social Security. Many already pay no federal income tax because their income is below the filing threshold. For them, an extra $6,000 deduction is meaningless. It doesn't put a single dollar in their pocket for groceries, rent, or medicine. Experts have been very clear. Low-income seniors who don't already pay taxes will not benefit from this. The other group left out is non-filers. Millions of seniors with very low incomes aren't required to file a federal tax return. Since this benefit only works through the tax system, they are automatically excluded and get nothing. This brings us back to the disappointment many of you are feeling. For seniors who are truly struggling with today's bills, a tax deduction they might not even qualify for that won't deliver any cash until next year feels like it misses the point. So, let's summarize the key takeaways from our look at the big, beautiful bill. First, this is a tax deduction, not a $6,000 cash payment. The actual savings are a fraction of that amount based on your tax bracket. Second, the benefit is targeted. It provides real tax relief for middle-income seniors who pay federal income taxes. Third, it provides little to no help for the lowest income seniors. If you don't owe federal tax or don't file a return, you likely won't see any benefit. Fourth, it's temporary, only scheduled for tax years 2025 to 2028. This bill is a major change for a specific group of retirees, but it's critical to look past the headlines. It's a tax tool for some, not a cash payment for all. Now, I want to hear from you. What are your thoughts on this? Is a tax deduction the right way to help seniors, or should the focus have been on direct payments? Let us know in the comments below. Your experiences and opinions are so valuable to our community. Thanks so much for sticking with me today here on The Wealthy Elder. I truly appreciate every one of you taking the time to learn about these complex bills and how they actually affect your retirement. Until next time, stay informed, stay empowered, and most importantly, take good care of yourself and your family. See you soon on The Wealthy Elder.